trend to trading 360. Stocks are bouncing back after a sell-off for 4 days, and we're waiting on NVIDIA, but right now it's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder of Theo Trade. Good to see you both. Good morning. Don, just a quick market thought. Look, you probably weren't surprised to see 4 days of selling. Some of your thoughts.
Yeah, we're back in what I term the volatility box, and that is the S&P futures trading and bouncing right between 5,900 and roughly 6,100. So this 200-point box has been around really since fairly early November, directly after the elections. We started, trading inside of this range, and it is this is a meat grinder in this range. So again, volatility box right now. There's no difference between 6,100 and 5,900. Till we break outside of those ranges, we're volatile.
All right. Let's talk about Baidu. We've seen there was a lot of love for the Chinese stocks, and let's see where we stand now. Baidu, what's on your mind?
Yeah, you're exactly right. There was a lot of love, specifically in like FXI, which is the ETF large cap, specifically again for of course China. But Baidu has really not participated in any of the upside, and I think it's actually going to just pull back kind of towards the lower edge of its range. And that range has been pretty consistent. It's been like up to 95, down to 80. So look, I'm just going to hop aboard inside of that range right now with what I term an in-out spread. This is like one strike in the money, one strike out of the money. A very, very small in-out spread. This is the March 21st expiration. I'm just going to buy the 91 puts, sell the 89 puts against. It's just a $2 wide spread, and this one's done for a 90-cent debit. And I do that just to take advantage of what I believe is going to be some short-term kind of, move back down, if you will, to the low 80 level inside of Baidu.
Okay, let's see, at $90 today, let's see what Rick Ducat has to say about the technicals. Please, Rick.
Yeah, I would agree with Don. This one seems like it didn't have as good of a move, and it has seems to have fallen off more than its peers in both respects here. And I did have my eye on a pretty similar range that Don was describing here. First, I looked at 100, though. This was a boundary that I saw here. That was about where we had a small gap. This was one of these sticky price levels here that we've often found support or resistance here. 96, 95, around that same level. I mean, I just drew it right here based on this most recent gap, but really you could have extended it all the way back to kind of another of these notable levels that price had a hard time staying above unless it made these large gaps, and then it kind of would have these big swings back and forth here. So in the shorter term, though, a smaller range to consider would be this repeated low area and our small gap near about 87, our green line here, and this range here near about 96 to the upside here. For now, price is moving above its shorter-term moving averages, are yellow 21-day and orange 63-day exponential moving averages here. We've seen quite heavy volume recently as well. Notice how many spikes, which are days where volume is 50% above the 50-day simple moving average of volume here. So very heavy trading in this name recently here. RSI trending downward, momentum near the 50 midline, not really a strong lean one way or the other, which is kind of exhibited by our moving averages continuing to move closer and closer together and move more sideways. When we look at our volume nodes and our volume profile study, we are very close to the point of control, the area of heaviest trading. So that could be a significant level to watch, near about 90 or so. And then if we were to look for other volume, it doesn't really get too heavy again until we are up here near 104, Nicole.
Okay, thank you for that. It's the question is what happens to some of these names, and you feel like Baidu was left a little behind. Don, final thoughts there?
Yeah, no, I absolutely agree on that particular front. By the way, I was looking at the volume as well inside of Baidu, and it is active out there. But look, it didn't participate in the upside. You saw upside in like Alibaba. That thing absolutely ripped. Again, most of the Chinese large caps ripped to the upside. Baidu was left behind, and right now feels like it's just going to kind of listlessly sink back down into that low 80 range.
Okay. Next up, we're taking a look at Target. Some of your thoughts on where this could be headed, and there have been a lot of questions about Target. You know, it just wasn't the family favorite anymore. Yesterday, I heard of a boycott. I didn't investigate that, but Jessica Inskip was noting that folks were going to Costco instead of Target. I don't know. What are you seeing here?
I'm a Costco person myself. You know what? This is make or break right now for Target. And look, this is going to be my bullish trade of the day over here. And the reason is, it is that much of a make or break. You take a look at Walmart right now, you take a look at the peers of Costco, and again, they're exploding to the upside. I mean, specifically like Walmart, Costco, pretty much hitting new highs on a day-to-day basis. Target's kind of left in the dust. I think there's actually some upside potential in here in the near term. Now, the earnings are coming March 4th. So I'm intentionally actually stepping in front of the earnings, trying to basically catch the marketplace as it actually, possibly upswings off that earnings announcement. How is the business really doing right now? Again, moreover, it's the lower end of its range right now. I'm going to step out and I'm going to take some risk, but I'm going to do it in a defined risk fashion. So I'm going to go out to the April 4th options expiration, and I'm just going to buy a very slightly out of the money call spread. I'm going to buy the 130 calls. I'm going to sell the 134 calls against it. So it's a $4 wide call spread. It's done for about $1.80 debit. So risk reward in here is decent. We need some upside potential above the level of 134 and can very well do that just off of the earnings announcement. But nevertheless, I'm still giving myself all the way to the April 4th expiration for Target to finally, breathe some life back into this underlying.
Okay, let's see. I mean, look, this chart's not a pretty one. I mean, that had a big gap down last November, December time, tried to make a go of it. But over 1 year, look, it's down almost 20%, right? So, Rick, some of your thoughts on the technicals, please.
Yes, never really a recovery after this very severe drop-off we had during our earnings event that we had in November. You can see pretty obviously where this happened here. Note once again, extremely heavy volume during that decline that brought us to our 52-week lows near about 120. So from that point, we did have a bit of a recovery here, but it was a disappointment for the bulls here. Look at this pink line near 145, low point, high point, high point, low point, low point, and then we did rally up. Notice this is where our earnings gap began. We topped out at that repeated low slash high point near 145. So we never even actually filled the gap after our very severe push to the downside here. Notice as well that 145 at the time lined up very closely with our purple 252-day exponential moving average. So a significant confluence of resistance at that area at which price failed. Now we are below our moving averages. They're trending downward here. We are struggling to hang on to this level near 126.50, the low point after we had that very small gap up and then some subsequent lows that we established a couple weeks ago there. So now when we examine volume and standard deviation channels, we can see that if we were to move lower, we're kind of out of the heavy volume areas here. The -1 channel lines up very closely with our 52-week lows. So 120 seems like a key level to keep an eye on here. The next heavy volume area is right here. 130 lines up with our yellow 21-day and our recent highs and our linear regression line. So 130, 131, that's kind of the first resistance area to watch. And then we got to take out these old highs here near 145.
All right. Well, look, and you showed that sell-off that we saw in November, never quite getting back there. And, there seem to be mixed reports from the analysts. UBS said there are several sources of tailwinds for Target for 2025. At the same time, I saw JP Morgan as a neutral rating, and they have a 146 target. That's higher than where we are. And how about this? We talked yesterday about Nike and Skims, Kim Kardashian Skims, to make more athleisure, athletic wear, leisure wear. Well, guess what? Target's doing much of the same and partnering and launching an exclusive activewear line, stylish activewear line with Champion. So that's something to also note that maybe could give them a little boost. Final thought, Don.
Yeah, no question about it. And one of the reasons I'm trying to step ahead of this earnings announcement is I think they have to come out swinging. They have got to have something major in this earnings announcement that's actually going to spark the rally, and that's exactly what I'm looking for. Hence why I'm actually stepping in front of the earnings announcement, which is actually something rarely that I do. I don't like being involved in earnings when there's that much of like this binary risk. But in this particular case, I think Target is going to be well positioned to the upside.
Yeah, Well, we'll see, because they have some big gaps on earnings days. If you look at a chart over, 1 or 2 years, you really see the big moves on the earning days. So good luck with that. And then last but not least, we'll take a look at Apple. Some of your thoughts on Apple these days, which has come off the 260 high.
Yeah, I'm stepping back into the Mag 7. Like, I've avoided this as much as possible when I actually come on here on a week-to-week basis and discuss a couple trades. I've just avoided some of the Mag 7 because it doesn't matter what you say, right? It's bullish. Doesn't matter what you say. Well, in this particular case, 6 out of the Mag 7 have actually seen some pretty heavy sell-side activity the last 4 days, with exception of Apple. And today, well, is Apple's day. So I'm looking for a rotation out of Apple, possibly into some of the other of the magnificent 7 stocks. In this particular case, it could be NVIDIA, it could be Google. You're seeing some of that price action today. Nevertheless, I am bearish inside of Apple. Not a huge bearish trade, just taking a nice spread again. This is the April 4th expiration. I'm going to buy the 245 puts, sell the 240 puts. Again, it's $5 wide put spread done for a $2.10 debit. Once again, it's what we term an in-out spread. Like 1 strike in the money, 1 strike out of the money, just looking for that quick pullback. And the irony is, when I was building this trade this morning, well, a lot of that price action has actually played out today.
Okay, yeah. And look, you send these early, so we know. We have the, documentation. Rick?
This one, interesting chart here, kind of a strange setup, because we had this longer-term upward sloping trend line that began shortly after this earnings event, all the way back in the early months of the year there, and we saw that it connected these subsequent lows. We broke down through it, but then it seems to have become almost resistance here, so it may have come back into play, and now we are once again finding ourselves below it. We also have a sharper, shorter-term trend line to consider here that is still in play. We are above our moving averages, our yellow 21-day and orange 63-day exponential moving averages here, and we did fail to take out this point where price stopped twice near about 247. So a bit of a disappointment once again for the bullish crowd here. RSI, green trend line still intact. We are just above that 50 midline, in jeopardy of breaking through both of those indicators here as we continue our trading day. When we look at volume profile and standard deviation channel, the heavy volume, the point of control, not terribly far away here, but around 225 or so. So this could be a key downside area to consider. And really the heavy volume is between about 225 to 230. So that's a general area to keep an eye on. Another volume node is about where we've been rejected here, lining up with that high point near about 245 or so. So the bulls would want to take out here near 247 and look for potential support as well at this double bottom here near about 220.
Okay. And look, very interesting now that you have an interest on Mag 7. I mean, is this right? What's going on? I mean, we have NVIDIA later. Are you buying that?
I am always interested. It's just, my trading inside of the Mag 7 has not exactly been spectacular. I like to take bearish positions. Look, I think the overall S&Ps, they're going to touch right back down into this 5,900 level. So don't trust this volatility as far as you can throw it. There's going to be some more sell-side activity, a little fear to the downside into the remainder of this week.
Right, understood. How do you feel about NVIDIA? Got any thoughts on NVIDIA for later?
There are underlyings that I don't want to touch, and that happens to be one of them. But I got to tell you, I got to take the bearish side of it. I mean, how many times can they possibly beat? So we'll see if Jensen has his leather jacket on. That means everything in here. But I am going to take the bearish side. Looks like a decent-sized move, though, poised for this earnings announcement.
Is that like Alan Greenspan's briefcase? Remember, we knew if it was fat that he was going to make a move. And if he had a thin one, he wasn't going to make a move. Do you remember that? Don Kaufman, Theo Trade, Rick Ducat, thank you both. Yeah. Good to see you both.